Hello, PFA. How we doing? Hope we're having a blessed day and a very lovely week. So today we're going to be talking about liquidity. So this is a very rare kind of topic, and it's also very complicated. So before I say anything about liquidity, I want to say that this topic is not for beginners. If you are still having issue understanding the basics of forex, I advise that you go and understand the basics of market structure, understand, some basic point of interest, understand, the highs and lows of the market, understand those ones properly before coming to liquidity. You understand? Because liquidity is like understanding what complex market structure is. Yeah, understand complex market structure first, then you understand liquidity better. Then for those that have been trying their best to follow along all the videos we've been doing right from the start till the last video we did on trading session, so this video is for you. Let's go into the business of today. So liquidity. This is the first video I'll be doing on liquidity because liquidity is kind of a broad subject. And using the PFA strategy and the way we trade in the academy, there are three types of liquidity we have. We have double top and double bottom liquidity, we have trend line liquidity, and we have highs and lows liquidity. All right. The most type of liquidity you're going to see in the market that occurs over and over again is highs and lows liquidity. That one happens quite frequently. And now let's talk about double top and double bottom liquidity. Now, we all know the general type of strategy we have is support and resistance. You understand? Once market gets to your support, you sell. Once market gets to your support, you buy. Once market gets to your resistance, you sell. Or when you mark out your order block and price enters into your order block, you should just buy or sell depending on the trend the market is that you're marking your order block. Or using trend line, once the market touch once and twice, during the third touch, you enter your buy. You understand all this kind of stuff. We know all these retail strategies very well. But as recent time goes on, we're beginning to understand that these things work only few times because market is taking you out after the trend line touches once and twice. The third time is not really, market is not really respecting it. Market is breaking the trend line, but then again later going your direction. Or during the double top, we see that okay, when the market creates a top, it creates another top. The third top is going to sell. Then market just breaks your areas of interest like it was never there. Go up, take out your stop loss, then go to your direction. And you're like, the market went to my direction, but it first took out my stop loss. This is what we call liquidity. You were basically liquidated. All this strategy, hedge funds, the big boys, as we know them to be, smart money, as many people also know them to be, already knows all this strategy. You understand? So most times when the market violates in double top and double bottom liquidity, most times when the market gives you a top, gives you another top, there is a high possibility that the market is going to look for an area of inefficiency here or another block and tap into it before selling. That's why most times the market makes this double top close to where an area or a POI is, be it order block or fair value gap, but mostly it's either an order block or fair value gap. You understand? So when markets, when you put your entry at where this red line is, market can just take your stop loss and continue going your direction. Market is meant to go to your direction. You were correct in your analysis. But the thing is just that market needs to take as many people as possible out before going, the direction it's supposed to go to. Hedge funds and these big banks, they know where many others are going to be. They know where many others are going to be. They're the one who generates this liquidity. Market needs liquidity to move. You understand? So, yeah, same goes for a double bottom. The market gives you a bottom, gives you another bottom, and you're like, oh, when it gets to the same level where the third bottom is, it's going to buy. The market just frustrates you. Take your buy position out, fill up a gap here or an order block, then buys. You're like, this market took me out first before going to my direction. Yeah, that is what they call simply liquidity. You understand? So once you see a pattern forming like this, make sure that if there is still a point of interest that needs to be mitigated down here, you wait for the market to come. And even if you want to enter at this level here, make sure you look for a very valid confirmation. All right? Same thing goes for a trend line liquidity. anytime, the market creates a top, a bottom, and it might be a bottom or a top depending on the trade. But in a bullish market, we look at it created a first bottom, a second bottom, and once the market is or price is coming to touch it, it's third time, it just goes up from there. But price just slashed through the trend line like it was never there and came to fill up a POI here or so before going. You understand? All these things happen, and same goes for highs and lows, liquidity. Yes, and this one happen quite frequently. You are marking your lower high, your lower low. Now, that's why I said, as if the market has not broken, in market structure, I explained that if the market has not broken lower than the previous, lower low, any other low it makes is not a lower low, it's just a normal low, you understand? So assuming market broke lower than this previous lower low here, we'll have seen that as a change of character, but this is not a change of character. That's why people get easily liquidated in the market. So using charts, let's give examples of all this liquidity. So we'll see how we enter the market. All right, so, and again, let me say one more thing before I leave this. This does not mean that triple top does not work in the market. It just means that most of the time, market is going to violate that triple top. You understand? It does not mean that triple bottom does not work or double bottom does not work. It works, but most of the time, make sure that where you are buying from, if you are buying from this level here, make sure that there is no point of interest that market needs to fill here before buying. You understand? Same thing goes to trend line. Trend line works. After two touches, the third touch and you buy, it still works, but make sure that there is no any area of inefficiency, which is FVG or other block that needs to be filled below here, and you are safe, because buying around here, knowing that if you put your stop loss around here, there's still some gap that the market needs to fill here. There's a high possibility that the market is going to take you out. So what you're going to do is wait for the market to do its thing. But if you get enough confirmation here using your strategy, you're good to go. All right, so first things first, let's look for a good trending market that has, double top and double bottom first. That's the first example we're giving. Now we see this market is in the bullish market. All right, we have your higher high here, and see what happened. You have a low here, which we'll see as a bottom. We have another bottom here. Retail strategy says that once price is coming to reach your third level here again, all right, when price has made 1, 2, once price is coming to make the third one, you buy. But see what happened. Price came to fill this fair value gap over here. So this is it here. Price came to fill this fair value gap over here before moving up. You see it now. You see how easy it is. That's just one for double top and for double bottom, actually. You understand? These things happen. It happens a lot. See, this is what we call just highs and lows liquidity. This one I just explained here. This is it here. See something? The market is making lower highs and lower low. Lower highs and lower lows. You see, lower highs, lower lows. See something here? This market is not lower than this. For a market to be, for a trend to be called a break of structure, that means to form a new lower low. This is not a lower low here. This isn't from a new lower low. This was still the previous lower low because the candle didn't go lower than this wick here. You understand? So basically, this was liquidity here. You understand? Those that are waiting for, the market to come back to this level so they can sell. They've actually been taken out because see what happened. The market came into a point of interest that is above where most retail traders will be looking to sell from. So this is it here. So this fair value gap here, this area of inefficiency, this was what the market was coming to come and mitigate before falling. So anything that's happening here is none of your business. Looking to sell from this high here back is none of your business. Make sure that there is no point of interest here. But assuming this place was already, filled up, that weeks have covered this place and there was no area of inefficiency here, no need for you to be waiting for market to come and tap into this place. You can just look for confirmation around here, then sell. All right. Then lastly, for trend line liquidity. All right. Let's look for an example to buttress trend line liquidity. And again, about fair value gaps, watch the videos on fair value gap and point of interest. They explain a lot of things. Like seriously. So trendline liquidity happen only, few times in the market. You understand? Most times trendline do work. Like here now, if you have marked your trend line here, this top here and here, you see your trend line worked perfectly. You understand? Worked quite perfectly. All right. We have your first touch here, second touch, and price kind of respected it properly here. All right. Yeah. So this was another. Oh, I just saw one now. I took it out again. I just saw one trend line liquidity example. Taking it out already. So basically what trend line liquidity is actually really insinuating is that once price has formed, one touch, third, second touch, that third touch, if you're going to take your trade off there, make sure there is no point of interest below there again, so you can take your trade. So that's basically that about that in the first video. So in the second video, I'll be talking more in depth about double top and double bottom liquidity, trendline liquidity, and highs and lows. I'll basically be trading them so you can see how it works. So cheers and God bless.